Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Mag 7 update. I did record this video, by the way, for the week of Monday, April 13th, 2026, and I begin with Microsoft. We have a sell signal from about a month ago below the 401.59. This is a 4 or 5 year channel bottom. That's a significant development. It tells us that Microsoft is on the defensive, bearish essentially, as we continue not only through the month of April, but even through the rest of the year. This long-term full channel extension, basically doubling the width of this previous structure that's been holding pretty well until recently, in play, and that's in the low 200s, 216, 218. You've got 213 as the October 22 low. I think that this area is in play. I know that's incredibly bearish for Microsoft. I don't know exactly what the fundamental circumstances would be, but technically speaking, I wouldn't be surprised to see the low 200s potentially by the end of the year, because we've seen that kind of a move already from the July 25 high. So we're not even a year into the sell-off that's occurred following that high from July of last year. On the way down, of course, we've got the mid to upper 340s, 344.79, 349.67, old highs and lows going back to 21 and 25. And this is an area that, yes, can contain selling on a monthly basis. We could bottom out here back into the low 400s again within a month or two of testing it, but closing below 344.79 is another shoe to drop on a longer-term show of weakness that would allow the low 200s by the end of the year. Now upside, 401.59 is your sellable resistance, both near, mid, and long term, and it combines with a descending 1/3 trend-defining speed line that takes into account that July 25 high against that more recent pullback low. And so it is an upward pivot point as we continue into the third quarter. But until then, this zone, narrowing every week now for the next few weeks, is sellable resistance longer term. From here, we can fall back into the 340s within a month or two of testing it. And yes, even further south as we continue in the later year. But closing above 415.01 is an aggressive up pivot. If you're short, exit that short position, in my opinion, and consider even reversing and going long, because I do think this 488.11 channel bottom that we closed back below, or below, I should say, November of last year, it held beautifully in the several months following, if you recall. This area would be in play again within possibly 2 to 3 months. I'd say 3 to 5 months anyway of closing above 415.01. On to Meta, rip-roaring rally last week. We pushed through and closed not only above the 588.35 one-year channel bottom that we closed below 3 weeks earlier. This is very similar to what happened in the NASDAQ 100 and the QQQ. By the way, if you want QQQ analysis on a daily basis in video form like this, go to wickedstocks.com and take advantage of our 2-week trial, and you'll have it. Also, we closed above the high of the low of 608.64. So technically speaking, and I say technically speaking because this occurred on late last week, and what occurred over the weekend is a breakdown in the peace talks between the United States and Iran. And so we may see missiles flying again here. I'm not sure, but we may see the resumption of war, outright war, the further continued constriction of the Strait of Hormuz, et cetera, which is bearish for the general stock market, as crude oil prices are likely to continue higher this week. So I'm not quite sure how Meta is going to react to that. If you're looking at just the pure technicals, I think you can buy 588.34 to 608.64 somewhere in this region, because I do think it's realistic that over the next, with present volatility, this could be over the next 2 to 3 weeks. I'd say by the end of May anyway, we should see 706.73. And this descending channel top at an all-time high, because it incorporates all of the activity off of that all-time high from August of 25. This is our aggressive up pivot into later year. But until then, this is a sell opportunity through May, June, and into July. We can fall away from here back into the upper 500, low 600 area within a matter of a month or two of testing 706.63, 706.73. So yes, 706.73 likely by the end of May or sooner, holding above 608.64. If we do happen to fall back and close below 588.33 this week, we are back to on the defensive, expecting within a week or so 525.72, which is the low settlement price that was put out 3 weeks ago. And I do think if we close the week below 588.35, we can find ourselves by the end of June or sooner at this 471.21 long-term support. this is a bottom picking opportunity through the rest of the year at 471.21. I think I have actually a better chart on that. Yeah. So if we close below 588.35 this week, by the end of June or sooner, possibly by the end of May, 471.21 in reach. This is a 4-year channel bottom that can absorb selling through the rest of the year, and we can round up nicely from there. On to Alphabet. Alphabet, stratospheric rally all the way to that February high, and that February high that week put out a key reversal high, bearish engulfing pattern in candlestick speak. We put out a new high, closed below the previous week's low, and then the following week we closed below this rising channel bottom. Double sell signal in 2 weeks that still suggests, I'll use that phrase rather than indicate, because we've obviously recovered significantly over the last couple of weeks, still suggests holding below 330.41, this 246 region as a still viable 2 to 3 month target. We do need to get up and over 330.41 to neutralize that. Until then, I see this as a rally to sell in the 330s all the way into the, 338 is the high settlement price on the weekly chart. So this is your zone of resistance for the week. And I'll take you back to this chart. Holding below the 330s will keep the 230s, 240s in reach over the next several months. Let's look at the downside here. If we do, let me back up just a little bit and mention that if you're a 3 to 5 day swing trader, 2 to 3 week swing trader, you can buy 300.52 to 304.40. That is kind of the near-term outlook. I know it contradicts what I just said about anticipating the possibility of the 240s over the next few months, but you can have, near-term bull trend framework in a what I would call a kind of a midterm bearish framework that still exists below 330.41. But inside of that, you can play ping pong, so to speak, between the low 300 region as support and the 330s as resistance. I will say that if we do rally this week and close above 338 even, that should yield 383.89 within a couple of months. And I don't show 383.89, but it is, I can show it actually right here. It is nothing more than this rising channel top that continues to rise through time. So what is 383.89 will be in the low 400s within just another 3 to 5 weeks. And so closing above 338 even is a go-long strategy into the low 400s within a matter of, a month, 2 or 3. Until then, this is still an area to respect for the market's ability to top out here as we move through May, June. I'll take you back to this chart again. Through June, we can fall back into the 230s, 240s. And yes, if we close this week below 300.52, the high of the low, and back below this descending channel top, this 3-month structure, that does pivot us aggressively south as we move into May, June. I would expect 244.66. On to Amazon. Amazon threw off a buy signal last week by closing above this 231.35 channel top. This is a descending channel at the top of an all-time high, or the all-time high. And so now, holding above 231.35, and this is a big question. Are we going to hold that this week with everything I just said about the breakdown in peace talks between the United States and Iran? But technically speaking, if that wasn't happening, if we didn't have that breakdown following Friday's settlement above 231.35, I would say aggressively buy 231.35, anticipating over the next 1 to 3 weeks 258.60, the all-time high that was put out last November, and over the next 2 or 3 months, 285.05 I think is realistic. This assumes we close the week above 231.35. And that's a pretty strong assumption to make right now in the present environment. I don't want to make too much of the breakdown in peace talks, but I do think it's going to add fuel to the crude oil rally, which is inflationary, higher interest rates. That all weighs on the broader stock market. So we could actually fall back and close below 231.35 this week. And that unto itself is a buy signal failure technically. That should, within a matter of 2 or 3 weeks, result in a retest of 198.79. That is the low settlement price that was put out last February. Let me actually jump to this chart, that if we do close below 231.35 this week, that failure does allow over the next couple of months a testing of this 1-year channel bottom at 183.23. So closing below 231.35, if your time frame is anywhere from 2 to 3 weeks to 2 to 3 months, I wouldn't be long Amazon. In fact, I would find a way to be short Amazon because I think odds favor a retest of the upper 190s and quite possibly the lower 180s by the end of June, let's say, where we actually could place an annual low. But until then, you can bottom pick 231.35, assuming we actually open above it on Monday, anticipating, once again, 258.60 over the next few weeks, 285.05 over the next few months, which is rising on a weekly basis. And I'll be providing you that information, obviously, on a week-by-week basis. On to Apple. Now, we cover Apple every single week in a detailed 10-minute video, 5 to 10-minute video that gives you the near-term, mid-term, and long-term. This is just long-term, broad brushstroke analysis. 290.11 is a 6-year channel top that's been holding beautifully for the last year and a half, can continue to do so, and below it, you should allow the mid-190s and climbing over the next full year or so of activity. On the way down, we have a 5/8 Fibonacci over the last year at 214.82 that can contain monthly lows. On to Tesla. Tesla tested and actually met an objective last week that 338.27. This came into being about 6-8 weeks ago when we closed below 432.90. Now, you're probably already aware that we cover Tesla every single day for free on our Wicked Stocks YouTube channel. And so I don't really need to spend much time here, but I will say that holding above 338.27 provides a buy opportunity back to 432.90 over the next 2 or 3 months, climbing into the 450s over the next 2 or 3 months. So it really is a 450s possibility now above 338.27, where we actually could top out on a monthly basis and fall away. Downside, if we close below 338.27, buy a 1% margin. I give you all those numbers in the daily Tesla report. We enter another sell signal that should, over the next 3 to 5 months, result in the mid-220s. On to NVIDIA. Now, NVIDIA we cover every single day on wickedstocks.com. If you're interested in NVIDIA analysis, check us out. We offer a 2-week free trial. But this is broad brushstroke, basic. But in our NVIDIA analysis every single day, it's just like the SPY and the QQQ, and just like Tesla. Actually, if you watch Tesla every day and you're interested in NVIDIA analysis or SPY or QQQ analysis, I think you should go to wickedstocks.com and take advantage of our 2-week free trial and check it out. You might really like what you see, and you might wind up using it, and then you'll stick around for a while. But if you recall, it was a couple of weeks ago that we settled above 176.51, and that indicated a likely test of the mid-190s, 195.86. We might see that this week, although I tend to doubt it. I think we're still a couple of weeks away from reaching 195.86, but if we do test it, it can contain buying through May, and we can fall back into the mid-170s or even lower over the following 3 to 5 weeks. We need to close above 195.86 to set off a significant buy signal into the third quarter. We're not there yet. 195.86 is your ceiling of resistance. And yes, if we do close the week back below 176.51, I do see the low 150s as a real possibility as we continue into May, June, July activity, where it converges with a 3-year channel bottom presently at 139.93. These all come together in early June. This is a significant zone of long-term support that can contain selling on an annual basis. Go to wickedstocks.com and take advantage of that 2-week trial and see what I'm talking about with NVIDIA on a day-to-day basis. Finally, Palantir. We cover this. This is not part of the Mag 7, but we cover it anyway. We had a sell signal a few weeks ago below this short-term channel bottom, expecting a retest, which happened last week, of this 125.41 high that was put out back in February of 25. We tested this area a few months ago, a couple of months ago. It held, and so here we are. If you're a 3 to 5 day swing trader, you can buy 125.41. We could rally this week back to 150.16. You could also buy 125.41 3 to 5 week swing traders, anticipating 172.64, which is a more significant resistance area, able to contain monthly highs that we can fall away from here again within a matter of weeks back into the mid-120s. If we can close above 172.64 in the weeks ahead, I would expect within 2 or 3 months 235.87 and climbing, but we're nowhere near that right now. In fact, let's cover the downside. If we happen to close below 125.41 this week, we may actually open below this on Monday with a potential sell-off in the broader stock market. I'm recording this video Sunday morning, Sunday late afternoon, early evening, Chicago time. The S&P 500 E-mini futures open up, and we'll just kind of see where that is and how they react to the breakdown in peace talks. The rally that occurred in the broader market over the last week or two was entirely based on the possibility of peace in the Middle East and the reopening of the Strait of Hormuz. But if that doesn't occur, that's going to be bearish for the market. And if we, with present volatility, if we open Monday and hold the week below 125.41, that I don't know why I've got 990. It's 99.92. Let me actually change that. For us, 99.92, eliminate that zero. 99.92 is actually in reach this week. If we open below 125.41 and we can't close above it on a day-to-day basis, 99.92 in reach. Should you go short right out of the gates Monday morning with an open below 125.41? I hate to give open-based sell signals. I like settlement-based. I will say that if we close Monday below 125.41, 99.92 in reach this week. With the way this market can behave, though, we could actually see 99.92 potentially by Monday's close if we open Monday clearly below 125.41. This descending channel bottom can contain weekly, possibly monthly selling pressures, but I do see a settlement below 125.41 allowing the low to mid 60s over the next several months. This descending channel bottom does actually converge with that area by early July, but I think the likely outcome could be closing the week below 125.41. We test 99.92 within 1 to 3 weeks, where we could bounce nicely back into the mid-120s, but over time, we fall into the low to mid-60s with a settlement this week below 125.41. I'm well past 15 minutes. I don't like to do that to you, but I'm going to leave it at that for this week's Mag 7 update. You have a great week.